What's going, guys? Jeff here, back again with another video. So today I'll be talking about inflation. So I think that a lot of people probably has been wondering, why do I keep talking about inflation, and is inflation really that bad? Today I'll be explaining a little bit more about inflation. So before we actually begin, I'm gonna be showing you guys what a CPI report kind of looks like. So this is the consumer price index for the month of November. Okay, so over here, right, you'll be able to see for the past entire year, every single month, the CPI data that actually comes out via the BLS.gov. You'll be able to see how what's the consumer price index every single month. The higher it is, that means the more inflation there is for that month. So in the November of 2020, we saw that it was 0.2%, December 0.2, January 0.3. So the big bulk of inflation actually came in starting in March of 2021. So in March 2021, when we suddenly see 0.6% month over month inflationary data, it starts to pile up. So people have to actually bring down what are the things that actually got into it. I'm gonna go into that later on, but first let's just look at where are all the big numbers actually coming from. So the next one will be from April, June, October, and November. So all these are all the higher numbers: 0.8%, 0.9%. All these actually added up together contain up to a yearly year-to-year data of 6.8% inflationary data for the US as of November 2021. Okay, anyway, let's get into some of the stuff in here. All right, so basically, inside the CPI data, the table, they actually show you the more general items in the table of content, be it your food, your energy, the items, your commodities, new cars, apparel, and services. So over here, you can see that it's very obvious. A lot of time, we're actually getting bumped up due to energy prices and also used cars. Most of the time is these two items that is usually constantly going up in price. For food costs, usually you go up in price, then you go down in price. But because with how inflation is going on at the moment, basically everything just keeps on going up in price. It's kind of inevitable in some sort of sense. So like over here, you can see, for food items, it's like 0.7%. Food away from home, 0.8%. Energy costs, okay, for energy wise, I think it's a slightly different because especially during the peak pandemic that is in 2020, we actually saw that energy price went all the way down to below $0. But right now, because with recovery coming back into the entire world again, people are starting to use more energy, to be it your factories are all reopening up, people are driving on the road again. Energy costs in general would eventually go up. Okay, so quite obvious, you see a lot more energy costs go up in here, which is why you get your 3.5, 5.9, 6.1, 3.5. All right, so the next one would be your 0.9%. These are the commodities, not including food and energy commodities. So it would be your lumber, it would be your copper, it would be gold, all these sort of commodity prices do go up. New vehicles and used cars and trucks. So this 1.1% and 2.5%. And do note that this is month over month. Means every single month, this is an increase in price. And the reason is very, very simple, due to supply chain issues. So supply chain issues, I'm pretty sure, is almost sort of a buzzword by now, especially inside the market. Whenever a company is unable to meet deliveries, for example, for Tesla or for NIO or for XPeng, whoever who could not meet up to the deliveries that they actually stated before, supply chain issues. Same for chip manufacturers, supply chain issues. And a lot of time, that's kind of how you add up. Yeah, so basically the rest of them are quite minimal. But let's just go down to the important parts, which would be the more specific numbers. Okay, so for over here in this entire chart, most of the time I'll be looking at the last column, because that's when we actually look at the month over month. So over here, usually I only take note of those that is higher than 2%, or if they do have a deflationary trend, then I'll actually take note of that. So same thing you saw already, which should be the energy. Okay, basically energy costs generally goes up. So 2.5%, which is the used cars and trucks. Over here, negative, nothing much. Airline fares. Okay, so airline fares is quite interesting because when you see an increase in airline fares, it can mean one of two things, which is kind of obvious because it's very, very binary. Because if airline fares do go up, chances are it means that recovery is coming back. But at the same time, when recovery do come back very, very strongly, the airline fares actually go down because that means there's a lot of airline flying through and fro from the country. The prices would definitely be going down because of competition, be it from your Spirit airline and your American airline and whatever airline it is. There will be competition in prices, and usually that brings deflation to the prices itself. Which is why when you actually see a increase in inflation for airline fares, a lot of time you do not really know what that actually means. So end of the day, you probably want to be looking more deep into the other things that can actually tell you more about this inflationary data. All right, so over here you see that basically everything is kind of going upwards. You know, flour mix 1.8, 3.5% on fresh sweet roast coffee cakes and donuts. Okay, so these are all the more specific ones, which is why for what I said before as well, food in general, you will see a lot of up and down, but for the October and November and possibly in December as well, I would I would expect food prices to constantly go up. I would probably see a downward trend maybe in January or February. That's my prediction, at least. So yeah. So these are all just the more specific for the food. Yeah, frozen fish and seafood went up 3%. Yeah, that's how crazy. The eggs went down in price, 2.7% downwards. But yeah, food in general, a lot of fluctuation on that side. All right, let's look at other things other than food. Okay, energy. So earlier you only saw the energy commodities, which is your fuel oil, your propane, kerosene, and firewood, motor fuel. Now for the gasoline, so which is the unleaded regular, the mid grade, the premium, which is when you go to a gas station or a petrol station, you see the different grade in the gasoline. And then for example, in Singapore, you will get your 92, 95, and 98, I think. I don't even put the 98 because that's too expensive. Bougie oil for my car. Don't need that. But yeah, after that, you can see, like for 3.1% for floor covering. So this actually goes down to the real estate part of US. Speaking of real estate, today it is the 23rd, one day before Christmas Eve, and they just came in with the home sales, new home sales. We expected an increase in 2.8% for the new home sale prices, but they went up like 12%. So it's like 6 times higher than expected, which is quite crazy. Getting a bit of coffee from my EBITDA cup. But yeah, which is why for real estate wise, it's a little bit harder for people to really take into account for inflation, especially because for inflation in general, you don't really put it into the CPI for the real estate, but you do put all the commodities into the CPI data trends. All right, so over here you can see 4.6% decrease for the other linens. However, do note that because 2 months ago it did went up 8%, basically they have to just come up do some sort of deflation to kind of balance out the prices a little bit. Okay, yeah, over here, so you can see men's apparel, men's suit, sports coat, outerwear went up by 6.7%. Same thing. Okay, so last year it went up by 14.1%, and then it eventually kind of like went down a little bit, and then it just got another bump up by 6.7% again. There's a high chance that we might actually see in December this actually going down, or even just going up by a little bit, like maybe like a 0.9% or a 1.5%. So yeah, something to really look into as well. For apparels, I don't really care. I don't really buy new clothes, clearly, because I'm recording in like my pajamas. So yeah, I don't care. But yeah, basically these are the items that you usually see. Okay, so the next important part, the last important part actually for this, which would be new vehicles, used cars and trucks, and new cars and trucks and used cars and trucks. So over here you can see 2.5% increase for the used cars and trucks. Same thing. All comes down to the supply chain issues. A very persistent problem. Even Jerome Powell, the chairman of the Federal Reserve, has also been talking about this for quite some time. So, yeah. Okay. Basically, the rest of them kind of boring. Usually, I read these every single month. CPI usually comes out on the 13th of every single month, but then you can just check BLS for the actual date itself. Okay, so why am I talking about inflation so much? So since that now you kind of know where you can actually see all these inflationary results, why inflation really matters. Because the thing is that when inflation actually goes up, it simply means that the power of the dollar is going down. Because if $1 used to buy you $1 of item, let's say back in 2010, let's just take that as our starting point, 2010. If a dollar buys you if a dollar buys you $1 of item in 2010, in 2021, that $1 might be able to buy you 60 cents of item. Okay, so if it only buys you 60 cents of item, basically that $1 is only equivalent to 60 cents. So with that huge drop, the power of money is getting smaller and smaller, which is why I'm always a huge advocate for investing your money instead of saving your money. Of course, don't just not have money at all. You still need some liquidity for your daily expenses, but investing is very important, and I really learned that a lot, especially in this year, in 2021, especially since we are nearing the end of the year as well. But yes, the reason is also with inflation going up, there's also a huge reason why it's going up, which is because of all the stimulus that the government has been giving out. So when Trump gave out the first stimulus and then Biden gave out 3 more stimulus, I think they printed so much money into the economy, and basically the entire economy is so filled with cheap money, and now we are starting to get the consequences of it. So over here you can look at the 10-year treasury yield. I'm not sure if you guys know how it actually affects the market. So basically the 10-year treasury yield is basically the bonds market, and the higher the yield, it means that the lesser people are actually in it, and the lower it is, that means the more people are actually in it. So when you actually see low yield, it means that a lot of people are actually getting into the bonds market because they think that maybe the stocks market is too risky, the crypto market is too risky, the commodity market is too risky, or even just holding money is too risky, and then they just put it into the bonds market, which at the end of the day, honestly speaking, I feel that the bonds market is probably the most useless market in 2021, because if you are getting 6.8% inflation year over year for 2021 alone, it basically means that if you actually put in money into the bonds market at any point of time, you are losing way too much money, and it just didn't make sense to me. But yeah, so because of that, I think that the bonds market doesn't really make sense to me. But of course, there are people who still feel that the bonds market is a safer place and better than the banks giving you like 0.05% or like 0.1%. At least you are able to maybe get 1% on better days. So over here, I would say like the lowest point here, you would probably be looking at a 1.1%, which happened in July to August. So I would take this as August. No, I would take this as July. So over here, you can see that, yeah, because of the July and August, that's when the CPI actually went all the way down. And that means that people probably thought that, okay, the inflationary fears are over. A lot of them just think that, okay, since we are kind of out of the woods, they just jump into the bonds market, which was why we actually see this sudden dip in the yield for the bonds market. So over here, it's the same thing. You can actually just look at S&P. I'll actually get the Dow Jones up here as well. Yeah, let me just get the Dow Jones as well. So we said July and August, right? So July and August over here, you can see around July and August, you see a sudden drop in price for the stocks market, basically, this sudden drop here. because people are basically going into the bonds market, and the only way you can actually go into the bond market is because you have money. And a lot of time people actually park their cash in all the ETFs that is mirroring indices such as your S&P 500, your Dow Jones, or whatever, your FTSE, your Hang Seng, whatever it is. So similar to your Dow Jones, probably you'll see the same thing over here. A sudden dip right after the CPI report. Very, very normal. Which is why that's one of the only reason why people actually use the bonds market. Kind of stupid, but yes, basically that's why inflation is very important. You can actually see where money actually goes into when you actually study more about inflation. But yeah, basically these are a little bit of the things I actually look into every single day. If you like my content or you like my insights on some of these things, I do upload frequently, maybe not on YouTube, but I'm trying to get an uploading schedule going. But I am going to be uploading every single trading day from January of 2022, as I have always been uploading every single trading day since June of 2021. But yeah, I usually talk about news and stuff like that, just over here. Yeah. Over here, yeah. Just follow this on Instagram, and then yeah, I'll get some good news out there. If you do enjoy the insights on my video, please subscribe to my channel, drop me a like. If you want, just click on the notification bell, because I do not have a set uploading schedule. I do want to get into one for 2022, and if I do, I'll actually remind you guys via Instagram or via the next video. So, but anyway, thank you guys for watching, and I'll see you guys next time. Jeff out.